Welcome to XM.com. You're watching the Daily Market Comment by Raf Boyajian. I'm Christina Marujas. Pressure is building in Washington as there is yet to be any major breakthrough in the negotiations to reach an agreement on raising the U.S. debt ceiling. While both President Biden and House Speaker Kevin McCarthy have reiterated that a default is off the table, Monday's round of talks ended without a deal, although both described them as productive. Time is fast running out for all parties to agree to a resolution to the debt standoff, amid repeated warnings by Treasury Secretary Janet Yellen that the government could run out of cash as early as June 1st. The looming deadline is dampening spirits on Wall Street, yet the outperformance of some heavyweight stocks, such as Alphabet and Microsoft, has been enough to pull the major indices higher. The S&P 500 is trading near 9-month highs, while the Nasdaq 100 closed at a fresh one-year high on Monday, despite a slide in chip makers. But the risk of a U.S. debt default is not the only things equity traders need to worry about, as Treasury yields have started to creep up again amid renewed hawkishness coming from the Fed. The 10-year yield is approaching 3.75% to levels last seen when the banking crisis first began to unravel. Fed Chair Powell may have indicated that he is ready to pause, but other FOMC members appear to be less convinced that inflation is coming down fast enough and keep up the hawkish rhetoric in recent comments. What's becoming clear is that even if the Fed does pause in June, it will not be signaling that it is completely done with rate hikes. Moreover, investors finally seem to be listening to all the hawkish grumblings, and rate cut expectations have receded substantially over the past few days, with only one 25 basis points cut now fully priced in by December. This is keeping the US dollar elevated at 2-month highs, and other majors like the euro and pound stuck on the back foot. Today's flash PMI releases for May have been somewhat underwhelming for European economies. Nevertheless, the euro is attempting to hold on to the $108 level, and the pound might be just managing to stay above the $1.24 level, although a bigger test for sterling is expected tomorrow from the latest UK CPI data. Thank you for watching the Daily Market Comment here at XM.com.